Technology is not always our friend, but hopefully we've got things ready and on the go. Ladies and gentlemen, of course, Mike Schisler with an in-depth perspective of the South African economy and, of course, within that global context to which we are inextricably intertwined right now. Now, we all sighed a bit of a breath of relief yesterday when no changes were made to the personal income tax levels. There had been much speculation of increases from, 40% to 42%. Instead, announcement was made on the budget providing 9.3 billion rand of income tax relief, as Mike alluded to a little earlier, to households, along with increased support and tax relief for entrepreneurs and small business as well. But the Tax Davis Committee is yet to come through with its recommendations to ensure that going forward, that tax policy framework supports economic growth, job creation, development, and then fiscal sustainability as well. And that still leaves a lot up in the air. Professor Jackie Arendse serves on SAICA's Academic Review Committee and chairs SAIT's Education Committee as well. And she's going to shift focus now specifically to matters tax related. If you could put your hands together for Professor Jackie Arendse.
Good, thank you very much. Good morning, everybody. I must say I was very glad not to have been the first speaker this morning, that I could learn from Mike's experience on the technology front. You know, as a presenter, you can do all the preparation in the world, but at the end of the day, you're at the mercy of technology. And so thanks, Mike, that you had to bear the brunt of it this morning, and I can now benefit from your experience. Okay, so I'm going to be talking about the tax proposals this morning. And of course, a lot of you might be thinking, what am I going to talk about? Because there really wasn't very much. In fact, really not that much in the budget at all. But if we just go forward to the next slide, budget highlights. When I was putting these slides together very late last night, and I was thinking highlights, I'm not sure it's highlights, but I couldn't think of any other words, so I left it as budget highlights. But a lot of these are sort of lowlights more than highlights, and Mike has already addressed a lot of the economics issues. And if we just cut right down to about the sixth bullet point there, that's where I'm going to come in, just talking about the tax proposals. So, as you all know, the sort of headline this morning is, the tax breaks of 9.3 billion, and as Mike has already dispensed with that, we should not get ready to spend all this extra money that's going to find its way into our pockets, because it's really going to be way overshadowed by inflationary adjustments, etc. Of course, some of the other highlights, and I'll talk a little bit more about these as we go through, some revision really to technical aspects like valuation rules on certain fringe benefits, etc. Steps to encourage small business and entrepreneurship. The Davis Committee has been working quite extensively, especially on small business, and there's a few proposals coming through there. Retirement funds, that's about the only thing where we really saw some relief is on the lump sums. And then fuel and excise taxes, etc. So what I'm going to do is jump into some of the specifics on this, if we can go to the next slide, and just go through the various aspects. Company tax rates unchanged, all sitting basically at 28%. So we can go on to the next slide. Small business corporations. Change slides there, please. Small business corporations, the table, we still have a table for this next tax year. Many of you will have heard the announcement in the budget that they are thinking of moving away from this tiered tax rate structure and rather moving to a new system that will focus on tax compliance credits. Now, this is an interesting development because it is taking in some of the practice that we are seeing internationally to promote compliance, and that is that yes, there's a penalty system to smack you on the wrist if you are late in your compliance, but the other side of it is incentives to incentivize compliance, and that's what they're really looking at here. So you get your tax returns in on time, there's some sort of credit or incentive that comes through. Of course, you can't really get a credit if you haven't paid tax in the first place. So the issue is, how will the tax be determined? And it looks as if they could be just moving all companies, etc., onto the normal 28% tax rate, but then have credits for compliance. But there seems to be a little bit of a sort of a mix-up with messages there, because surely the tax compliance credits should apply to everybody, not just small business. So this all remains to be seen. But for the next year, certainly, the new table I've shown there, and really just inflationary adjustments to the various levels. If we could go to the next one, micro-businesses. This doesn't affect many of you because around the country there's only around, well, less than 10,000 micro-businesses that have registered. At the moment, we stay with the same tax rates. The proposal is that going forward, and this would be after, further down the line, they are looking at giving a little bit more tax relief, raising the tax-free threshold, dropping the maximum rate to 5%. But this is really a storm in a teacup because very, very few taxpayers are on the micro-business system. I guess what the Davis Committee is anticipating is perhaps relaxing the requirements around micro-business to encourage more people onto the system. And that is a development that, well, it remains to be seen. It's interesting that they're looking at doing away effectively with the small business corporation specific relief and rather beefing up the micro-business. Although there's proportionately not a lot of small business corporations, there's certainly a lot more SBCs than there are micro-businesses. So interesting on the tack that they're taking there. Individuals, as has already been mentioned, we've seen really just can we even say inflationary adjustments to the tables and the rebates, fairly small changes that have taken place across the board. So we see all the same tax rates, 18, 25, 30, etc. And I suppose a lot of people were relieved to see that the maximum marginal tax rate is still 40%. Although the counter argument to that is that, of course, this is an election year, and it's very doubtful that we would have seen any change in tax rates in any meaningful way just yet. Of course, what happens further down the line remains to be seen, because next year will not be an election year. And perhaps we will then see a sort of a super tax being introduced. Having said that, there are really not many taxpayers in that super tax category, although they do pay a large percentage of the taxes. But if one does introduce a super tax rate at, say, 42%, how much additional revenue are you really going to generate? But, of course, I mean, if we're looking and scratching around trying to find additional sources of tax revenue wherever possible, then that might be something that's looked at next year. On to the next one with rebates. Well, here again, just sort of your 5.3% adjustments across the board. So we've got the 3 rebates, and they've all been adjusted by the same percent. Interesting that the percentage adjustment this year at 5.3 is less than the percentage adjustment last year, which was 5.6%. So it's slightly down this year compared to last year. On to the next one. Of course, if you look at the tax rate, tables and the rebates together, then you're coming out with your tax threshold. So that all follows on the same sort of percentage adjustment, and so our new tax thresholds, 70,000 pretty much for people under 65, 110,000 and 123,000. So really nothing major there. If we look at personal income tax relief, and this really builds into that 9.3 billion supposed tax relief that has been given back to individuals. Of course, at the various different levels, you'll see different amounts of tax relief. So if we look at the lowest sort of income levels where people are taxpayers, so that's above the tax threshold of 70,000, you're looking at relief around 646, and then through to the higher end, down at the bottom, relief of 4439. But really, in the overall scheme of things, that is absolutely minimal when you consider the various other changes that take place, the various other taxes, e-tolls, etc. Do we even need to go there in terms of all the additional payments, the additional fuel levy, the additional fuel cost, etc.? There's no doubt that people will be feeling a pinch in their pockets. All right, on to the basic interest exemption, our incentive for saving, no change here at all, so we still sit with the same exemptions as we had last year. And of course, the prior year was only, I think, 1,000 Rand less than, so the increase going back 2 years was 1,000 Rand and no change since then. So really not much that has changed on this front. One area where we have seen change is on the retirement fund lump sums, and I'm sure you'll hear more about this a little bit later on the financial planning side. But we've seen on the withdrawal benefits, remember that lump sums, whether it comes out by way of withdrawal during a sort of a person's working life, as it were, or on retirement, the way that we tax those lump sums is according to special tables. And so we see that the special table for the withdrawal benefits has been amended a little bit, not that much. So you see your exemption exemption at the bottom has gone up from 22,500 up to 25,000. So that's not a major shift, but it is a change, and you'll see that the other tiers have also been adjusted. But if we look at the next table, if you go to the next slide, there you see the significant increase. The exemption, whoops, I think you went 2 slides forward. Just come 1 slide back. Yeah, there we go. All right, so there the exemption has increased from 315 up to 500,000. So that is quite significant, obviously. That's about the most significant thing we saw in the budget. I don't know if it's got anything to do with Prof Gordon being 65 years old, but no, I'm quite sure it doesn't. But yeah, it is an interesting one that's about the only significant change we saw in the budget. All right, on to the next one, subsistence allowances. Small changes here as well on your deemed expenditure, the daily rates. We can jump past that. And of course, we get on to CGT donations tax. And here, really, absolutely nothing has changed. So we see the same inclusion rates that are coming through individuals, companies, trusts. On to the next slide. We see the exemptions, all exactly the same, no change there at all. If we go through to the next one, donations tax exemption, and sorry, you're going a little bit too fast for me. Donations tax exemption and the estate duty abatement, both unchanged. Interesting, those amounts have both remained unchanged now since 2007. So really, we could say that those amounts should be at least double what they are now if you were going to kind of keep pace with inflation. So there is a way of sort of indirectly recovering additional tax on sort of wealth tax or capital transfer tax, if you like. Let's go to the next one, and this is one that impacts on virtually everybody, our medical scheme fees tax credit. That's your monthly credit that you get for your medical aid contributions. 6.2% increase there, slightly more than the 5.3% increase we saw on the rebates, but nowhere close to the actual increase in medical aid contributions, I'm quite sure. So again, a bit of a lag between reality and the supposed inflation adjustments. Again, a change to the travel allowance table, so these amounts have been updated. Whether it's reasonable in line with real inflation, well, that remains to be seen. I'm sure you have your own comments around that, but you will see that the value of the vehicle, there's been increases there as well as fixed cost, fuel cost, maintenance cost. In some cases, fairly reasonable increases, in other cases not as much. All right, let's go to the next one, your fixed travel rate. Of course, this is where you travel less than 8,000 kilometers a year and you get reimbursed on a sort of a fixed rate. That's gone up by a very minimal amount from 3.24 cents to 3.30 cents. In brackets, it shouldn't say 324 rand cents per kilometer. It's 324 cents it was, and it's now gone up to 330 cents per kilometer. On to the next one. Now we come to some of these sort of proposals, the broader-based proposals in the budget. The Minister mentioned that his proposal that he put on the table a couple of years ago around tax-preferred savings accounts, that will become a reality later this year. And the idea is that if people invest into these preferred savings accounts, the interest would be tax-free. So that is a way of incentivizing savings, and this is really why you are not seeing an increase in that basic interest exemption, because we're seeing the focus really coming through these tax-preferred savings accounts. So it's not a new idea, it's just something that has taken a bit of time to come to fruition, but it looks as if it will see the light of day. And then, of course, onto company cars. Don't panic around this too much, but there is going to be a change in the evaluation rules for fringe benefits, but they say they're going to move towards using market value of the vehicle, but they'll phase this in over 4 years. So we'll need to have a look and see what comes through in the more detailed proposals in this area. But it really seems to hinge back to, all thanks to people who have been getting cars working in the motor industry, and of course the cost of the car in that case is much lower than market value, so they've decided to rather move towards market value. And then on public benefit organizations, just a slight relaxation in the rule around the requirement that you must distribute 75% of your income in a particular year. Let's go on to the next one. Income protection policies. We know that there are already changes coming in to disallow the deduction of premiums from the 1st of March 2015, and at the same time any further payouts will be tax exempt, and they just need to sort out the wording here. Already people have found some loopholes, and so they want to tidy that up. On residential accommodation, Again, the value of the fringe benefit is going to be looked at. Here to say, instead of having to go for a tax directive when your real value is less than the calculated value, they are going to change the legislation to address this, to make the calculated value more realistic. Onto cross-border retirement savings, so people in pension funds, whether they're South Africans investing overseas or the other way around. There have been some confusion around interpretation when it talks about pensions or annuities. Are they talking about lump sums, annuities, etc.? That issue is going to be clarified. And then onto the small business development. I think a lot of people were sort of waiting with bated breath because there's been a huge focus on entrepreneurship. We know that the Davis Committee has put together its first report on small business taxation, and we're all waiting to see what proposals they're going to come up with. What the Minister did say is that the government wants to create an environment that supports informal traders and entrepreneurs and wants to develop small business into larger enterprises. Exactly how that's going to be done, though, remains to be seen. It's not a very easy mission to accomplish. And already we have seen some changes. I've mentioned some of the changes to the current tax rates on small business, etc. Yes, there are some changes that are being proposed there, but of course tax is not the only impediment to small business growth. And so there has to, I think, be a cohesive effort right across the board if one's really going to address this issue around red tape, bureaucracy, etc. for small business. Let's go to the next slide. Some of the other initiatives. Looking at providing grants for non-business entities or by non-business entities, giving tax exemption for any grant received by a small business, whatever the nature of the grant is, and then revising this tax deduction for venture capital companies. This is the Section 12J that was put into the legislation a few years ago, but has had very minimal take-up. I think the idea was great when people first looked at this deduction. It looked quite appealing, but again, as we see so often, it became hamstrung because of all the intricacies of the provision, and especially the one aspect of being taxed on the recoupment. So you get a tax deduction when you put your money into the VCC or you take up shares in the VCC, but then when you get out of that investment, you have a fully taxable recoupment, and that is not appealing to many people. So I think that is one area that is going to definitely be looked at. And then some of the other aspects that we mentioned in the budget, transferability of tax benefits if you dispose of your holdings, increasing the asset limit, no CGT on the disposal of the assets, because of course that again is going to create a pinch later on if you end up getting taxed on the disposal, and expansion of the permitted business form, so just increasing the scope of that tax deduction. And then on excise duties, well, we all love to see this one, especially if you don't smoke. It's lovely to see how much people are paying. I've already heard people saying that their colleagues are complaining about the increase in the tax on cigarettes, etc. So we saw excise duties increased by between 6.2. We can go to the next slide because everyone wants to know, yeah, but exactly where. So here you can see where these increases come in, and you can sort of pick your drink of choice there. And if you are drinking traditional African beer, then once again you don't have any increase at all. We have never really seen an increase in that at all, and I understand it's because there is a health aspect to that. But I suppose some people might argue that they only drink whiskey to bring down their cholesterol, etc. So, you know, you could say there's a health aspect to that as well. But let's not go there. Okay, on to the next one. No, just on that one, you'll see that the percentages do vary quite substantially. That's enough said on that. On the fuel levy, of course, another area where we all feel a little bit prickly at the moment with the substantial increases in the fuel price, toll road, toll fees, etc. There is going to be another increase in the fuel levy, about 12 cents a litre, compounded with an increase in the road accident fund levy, 8 cents a litre. So 20 cents a litre increase on the 2nd of April. That will be coming through. Just a bit of a breakdown. It's sometimes just quite interesting to have a look at the breakdown of exactly how much we are paying by way of fuel levies, etc., etc. So you can see there that for this year going forward, R3.32 per litre on petrol and 317 on diesel. So that is quite a substantial amount of tax that we're paying on petrol. Of course, the idea is perhaps we shouldn't be using our cars. It's just a pity we don't have an alternative. I'm sure a lot of us would like to get on bikes and ride to work on your mountain bike, but that would be just far too risky. So we have to rely on our cars, and unfortunately it is just getting more and more expensive. Of course, the other big topic of the day is environmental taxes, what's happening there. We did see some mention around going back to the biofuels, the incentives for biofuel production, and the Minister mentioned that subsidy will take effect in the second half of 2015, coming through the fuel levy. As Mike mentioned, acid mine drainage, a tax on that, an additional perhaps source of tax revenue, but hopefully that would be earmarked and ring-fenced to be used specifically around the area of acid mine drainage. And then, of course, carbon tax, which is tremendously controversial. Looks like a certainty. We've had the discussion paper that's come through from National Treasury. We need a lot more definition in many aspects, but the implementation date has been postponed by a year to 2016. All right, and then just some changes in the VAT area, the 4 monthly VAT category. This was brought in especially for small business and basically worked on a cash basis. So instead of on the invoice basis, you could do your VAT on a cash basis. But the Minister mentioned that very few vendors are actually registered in this category, and so they proposed to do away with this category, which personally I think it's a bit of a pity, because I think this is one area where it's a very simple VAT category for very small vendors. And I think a lot of people, well, I would imagine a lot of people would make use of it. I'm sure, again, maybe it's around the marketing that perhaps a lot of people are not aware that this is a possibility that is there, but it's going to disappear, so it's not going to be there for much longer. And then on going concerns, of course, when you have a going concern sold by a vendor to a vendor, there's the possibility of the supply being zero rated as long as various requirements are met. Those requirements are set out in the VAT Act and supported by interpretation note number 57, which gives additional information on this. Now, they are going to clarify this whole issue about both parties being vendors, etc. You'll see there the third bullet point down. According to the interpretation note, the recipient must agree that at the effective date it will be a vendor. The legislation will be amended to remove the uncertainty regarding whether a person must be a vendor before the acquisition of the going concern. Because obviously, well, this is compounded really with the difficulty in being able to get a VAT number. And so the idea is that, you go and buy a going concern, you've got to register as a vendor first, otherwise you're going to nullify the zero rating of that transaction. So it is good that they are addressing that issue. But of course, what we really need is for them to address the issue around VAT registrations. That would clear up a lot of problems. On tax invoices, the requirement to issue a tax invoice within 21 days will be relaxed for agents. And then, of course, credit and debit notes, there is no time restriction. On to the next one with agents. Again, a bit of a focus here that they're going to try and clarify the uncertainty around documentation that is required to prove your entitlement to input tax. This is quite a big issue and has been for many years in terms of establishing that you really are acting as an agent, and who exactly should claim the input tax, the agent, the principal, etc. So they are going to clarify that. And then various other amendments. Now, there's quite a lot more in their sort of Annexure C document that has a lot of the technical tax amendments. Many of them do apply to very specific and contained circumstances and very specific taxpayers. And a lot of it is tweaking existing legislation, so fixing things perhaps not clearly drafted when it was first put into the legislation, sorting that out. And then, of course, going forward, the changes that we can anticipate further down the line, well, a lot of that's going to be driven by the documentation coming out of the Davis Committee. And so the Davis Committee, as I say, currently has been working and focusing on the aspect of small business. They have put their draft report together. It hasn't been released. It remains to be seen what's in that report. But they are looking at the impact of the tax system on economic growth and job creation. Then they'll be looking at the next project, which I haven't mentioned here, is base erosion profit shifting. That is a big one that they're focusing on. And then they'll look at VAT, mining taxes, and estate duties. Now, of course, when you look at estate duties, this is a question that often comes up. Whatever happened to that study that was supposed to be done looking at the interplay between estate duty and capital gains tax? And it was mentioned a few years ago in the budget, and nothing further has been said. But obviously that is something that the Davis Committee will be looking at, and when they come out with their report, we'll have a better idea of where exactly we're going on wealth taxes per se. All right, so that's just a very quick overview on the tax side of things. Thank you very much. I'll hand over. Thanks.